Good morning, good morning, good morning. It's me, Kenny Polcari. It is Monday, November 1st, and I am live from Santa Clara, California at the Hyatt Regency, outdoor by the pool. So what do you need to know? The Dow, S&P, and NASDAQ all closed at record highs on Friday, and stocks are up again this morning. The G20 produces a 15% global tax structure, but not much else. The climate conference starts today, and it's going to last for the next 2 weeks. Expectations, though, are not very big. And it's a big week for the Fed. Will the taper start in November or December? And what are investors going to infer about rising interest rates in the new year? And what are we having for dinner tonight? We're going to have the farfalle with roasted cauliflower. It's simple yet so delicious, right? So, boom, Friday, end of the month. Stocks ended the month on a high note. In fact, the S&P pierced another century mark, closing the day at 4605, while the Dow and the NASDAQ also made record closes. And this morning, U.S. futures and global markets are all up again, no matter what that Amazon and Apple disappointed investors on Friday. And while those misses were a surprise, let's not overreact to what it really means, right? Amazon lost 2% while Apple lost 1.8. Hardly anything to get worked up about. I mean, they're foundational holdings, right? They're long-term holdings. So unless the story has fundamentally changed, you just need to forget about it. Look, both companies warned of supply chain issues, and that's a problem. Guidance suggests more difficulty ahead, and that could be a problem too. But again, we know this, right? It's not a new story. Everyone has reported the same issue, so it's not a surprise. And in fact, both these stocks really took it much harder at the opening, but managed to recoup much of the losses during the day, suggesting what? That investors are not concerned that the fundamental story has changed at all. Yes, are there potholes ahead? Sure. But are the potholes going to change the long-term story? Probably not. So if you're a long-term investor, there are plenty of other things to focus on as we move into November. For months now, global investors have been considering what all this means, right? The supply chain issues and the labor shortages, all while trying to understand as well how sticky inflation was going to be and how these disruptions were going to add to that inflation story. Yet, investors still took stocks higher. And speaking of inflation, economic data on Friday continued to reveal that prices are rising and rising rapidly. The PCE deflator year over year coming in at plus 4.4%, and while right on target, it's high and it's going higher. And the Wall Street Journal leads with this story. U.S. prices and wages rise at the fastest pace in decades. Strong consumer demand and supply shortages are testing the economy with rapid uptick in inflation. Now, the report said that consumer prices and wages are rising quickly. It also revealed that consumer spending is very healthy despite the expiration of those enhanced unemployment benefits, right? And this is now putting pressure on the Fed to do and say something this week when the Fed holds its monthly FOMC, right? The Federal Open Market Committee meeting. Because rising inflation that outpaces rising wages will leave consumers worse off. And that could force the Fed into a new narrative when discussing interest rate policies. Remember, it is expected that the Fed is going to announce a decision to start tapering this Wednesday, right? The announcement will come on this Wednesday. The actual start date, though, is still unknown. The smart money thinks it's going to begin in mid-November and end by June of 2022, which is an 8-month process. The kicker is going to be, though, if they announce a tapering, that will be completed in 6 or 7 months. Because that's going to suggest that they are much more nervous about inflation that is spinning out of control, and that's going to suggest that we can expect an interest rate move maybe sooner than June of 2022. And that is going to spook the markets. Now look, I fully expect that he's going to stick to the narrative that investors in the markets already expect, but you need to listen to the language to see if he leaves the door just open a little bit, just enough to change the story if he has to. And if he does, don't be surprised if we see interest rate increases happen in late March or early April of 2022. The 10-year Treasury ended the week yielding 1.56%, leaving it thrashing around looking for direction. This morning, the yields are up again at 1.58%. U.S. futures are also up this morning as well. In the end, your view of what's happening depends on where you look, right? Stocks are telling you one story. It's all good. While the bond market is telling you something much more different, that's much more concerned about inflation and interest rate normalization. So the question is, which camp are you in? Over the weekend, Treasury Secretary Janet Yellen told Bloomberg News that she is not worried at all that the sharp moves higher in the Treasury markets is anything to be concerned about. Last week, the gap between the 2 and the 10-year flattened considerably. In fact, the most since July of 2020. And when that happens, the expectations of a future Fed move cause investors to bet on a rate rise sooner than anticipated, which now suggests a possible mid to late spring, right? Like I said, think April, May, versus the expected June timeframe. I trust that Jay Powell is going to try to keep the narrative on track, at least through the end of this year, so he doesn't create all this commotion and chaos into year end. Look, oil ended slightly higher, right? It was up 41 cents on Friday, closed at 83.23. This is Joey once again is begging OPEC Plus to increase production, as he's on his way to climate change summit. Right, to satiate demand and slow the rapidly rising price increases, right? Iran, as you can imagine, said, nah, there's no need to increase production. And wow, that's a real shocker. One way or the other, the push is coming, right? Oil is going to continue to go higher. The trend line suggests that we're in between 81.50 and 86.50. And this morning, oil is trading at 84.30, up 0.6%. Thursday brings us the results of the next OPEC Plus meeting, and what will they do? Will they increase production, or are they going to make Joey sweat? My sense is that OPEC has zero intention of raising production beyond what the current plan is, and demand continues to surge, right? And you can expect prices are going to follow. Overnight, we saw Japan shoot higher. The Nikkei was up 2.4% after their elections over the weekend, bolstered the expectation for more stimulus, right? Prime Minister Kishida's Liberal Democratic Party preserved its very strong majority, and that suggests that it's all systems go. Stocks in Hong Kong and China, though, retreated after China reported weak factory orders due to power shortages, surging commodity prices, and yes, COVID shutdowns. Chinese PMI, the Purchasing Managers Index for October, coming in at 49.2, falling below the neutral line, and now in contractionary mode, all while the IHS Market PMI reported 50.6. So it's a little bit confusing. They're just above the neutral line in expansionary mode. China's property sector remains a bit of a wild card. 4 lesser-known developers last week defaulted on bonds last month, and the Evergrande pushed their overdue bond payment until the 11th hour, which suggests that where there is smoke, there is some fire. And so Asian investors await. In the end, investors are betting that the Chinese economy is slowing, thus the weakness. Tuesday brings us the Reserve Bank of Australia monetary policy decision, as the earnings parade also continues on that side of the world. Now, just to bring you up to date, for the year, both China and Hong Kong markets are actually down 6.3 and 8.3% respectively, all while Japan is up 7.5%, Australia is up 12%, Taiwan's up 15%, and South Korea is up 4% on the year. Really underperforming U.S. markets, right? European markets this morning are higher. The G20 meeting over the weekend in Rome did little to produce any definitive climate results, but they did celebrate the fact that there is now a 15% global tax rate. Joey continued to try and convince OPEC Plus to produce more oil, while at the same time balancing climate change issues. The Bank of England is due to announce any bond buying program and interest rate changes on Thursday. Barclays Bank is trading down nearly 2% this morning after CEO Jes Staley stepped down over an investigation into his relationship with Jeffrey Epstein. As of 6 o'clock this morning, European markets were all up greater than 0.75%, with Italy leading the way, up nearly 1.5%. U.S. futures this morning are higher, and now, in fact, stocks are higher as well. The market is now open. The Dow's setting a new high. S&P, NASDAQ are all still higher, right? So the idea is, from Friday, highs beget new highs, which is what we're seeing today, right? So that story is alive and well. The Dow and S&P and NASDAQ, remember, closed at record highs on Friday and thus are making new highs today. D.C. is still in flux. The Democrats not sure of what to do next. Will they vote on this spending bill on Tuesday or not? Right now, it is still very unclear. Economic data today includes market U.S. manufacturing PMI expectations of 59.2, ISM manufacturing of 60.5, both numbers well into expansionary mode, so that's good. Construction spending expected to be plus 0.4%. Later this week, besides the all-important Fed meeting, we're going to get ADP employment report, expectations of 400,000 new jobs, and Friday's non-farm payroll report, expectations of 450,000 new jobs, both of which will be top of mind for investors considering what is expected from the Fed, right? There are a good 20 plus earnings due out today, so you're going to see that. You're already starting to see them, beat on the estimates. They're all going to start to beat. Bitcoin is trading at 62,000. Ethereum is trading at 4,300 after a little bit of a volatile end of week and weekend. The S&P ended the day at 46.05, like I said, after trading as high as 46.08 and as low as 45.67. Futures action this morning and actually market action now suggests that we're going higher still. And if European markets are any indication, a move of plus 0.75% would not be out of line. Even a 1% move wouldn't be out of line. We remain in the trading channel. 4,400 support and 4,700 is resistance, and so anywhere within there would be considered normal trading. Remember, you can text the word invest to your cell phone, text the word to 21,000, and you're going to get my digital business card. Feel free to download it, send me an email, send me off a text, give me a call. I'm always happy to engage. You know me, I'm happy to engage, talk markets, talk planning, thoughts, concerns, ideas, anything that's on your mind, right? And you realize, and you can follow me on Twitter and TikTok at Kenny Polcari, which is my handle. You can get me on Instagram at KennyP1961. So what are we having for dinner tonight? So this is such a simple dish, but yet it is so delicious. It's farfalle with roasted cauliflower. You don't really need too much for this. You just need a couple of things, right? So, because this just could not be easier. So you're gonna need a pound of pasta, right? So you need a pound of farfalle. In this case, you need 2 heads of cauliflower, butter, olive oil, garlic, salt and pepper, and plenty of fresh grated Parmigiana cheese. To top it all off. So here's what you're going to do. You're going to start by putting a pot of water, salted water on the back burner, bring it to a boil, let it sit there. You're going to cut up 2 heads of the cauliflower, right? Cut the cauliflower into pieces, cut it in half. Don't leave them really big. Put them in a roasting pan, season them with salt and pepper, put a little bit of oil on there, and about a half a stick of butter. Just cut it up into little dollops and place it around. And then you got to put 3 or 4 cloves of chopped garlic in there. Put it in an oven at 400 degrees. Cover it for the first 20 minutes and then take it off and allow it to brown up. The whole thing is probably going to take you 45 minutes, but you want to turn the cauliflower as it cooks because you want the whole thing to get golden brown. In the meantime now, you're going to put as it's ready, after about 20 to 25 minutes, put the farfalle in, cook it up, 8 to 10 minutes max. You want it to be al dente. You want to drain the pasta. Remember, always reserve a coffee mug full of the pasta water, right? Strain the pasta, put it back in, add a little bit of the water back just to make it moist. Now, you're going to take your nicely browned roasted cauliflower out of the oven. You're going to put it right directly into the pot with the pasta. You're going to mix it up. You're going to put 2 handfuls of grated Parmigiana cheese. It's going to get all, if it's nice and hot, the cheese is going to get all melty and delicious, right? So stir it, mix it. And then when you serve it nice in warm bowls, and always have extra cheese on the table for your guests. In the meantime, you can now there's a plane above me, right? We're gonna be right in the line of the planes going over me to the San Jose airport. One way or the other, the day out here has just started. I know by now it's already 10:30 in New York. It's only 7:30 out here in California. Have a great day, and until I see you tomorrow, take good care.